good afternoon and happy new year to everyone. Welcome back. My name is Tony Zhang. I'm the chief strategist here at OptionsPlay. I am back here after taking a few weeks off for paternity leave to kick off 2024 with a topic that I think is at the top of mind, or what should be at the top of your mind at the beginning of this year, which is setting the right mindset, setting the right framework for how to achieve profitability in your trading. And in this session and in this series, we're going to cover a series on behavioral finance, on the mindset, the tools that you will need if you want to be a successful and profitable trader. Bob, thank you so much. It's another boy. I'm happy to say that we have two boys. The first one, Max, is about 2 years old now, and now Isaac to the family. So thank you so much, Bob. But like I said, what we will be covering during this session and over the next few sessions is really thinking about what tools do you need to round out your education to become a profitable trader? And while there are a lot of different things that you might need to learn in order to get to a point where you can trade profitably, whether that's technical analysis or fundamental analysis or options strategies, we're not going to cover any of those things because those things, while important, are not the critical aspects or not the critical elements for how to achieve profitability. What we are going to spend our time during this session is talking about mindset, talking about how mindset prevents you from being profitable so that you have a shot at understanding of what you have to overcome in order to achieve profitability. Now, here at OptionsPlay, our focus on these education sessions every single Thursday is to empower you to trade sustainably and confidently. And that's what we strive to provide every single Thursday. So thank you so much, everyone, for those of you that are members that support us here at OptionsPlay, that allow us to continue to do this. For those of you that are currently new to OptionsPlay, I hope that these sessions provide you with something to take away from that help you achieve sustainability and profitability, and for you to be able to trade confidently and join us as members to support us. But before we get started, what we are going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any specific securities that we might use as example purposes during today's session. So what I want to kick off with is first discuss kind of what are my goals for this four-part series. Now, while it's a four-part series, 3 of them is going to be dedicated to this topic that we're going to be discussing. Next week, we will take a bit of a break to kick off earnings season. Second, who is this summit for? We're going to discuss, for those of you that are traders, whether you're beginner, whether you're advanced, whether you've been trading for a few days or a few years, kind of who this session is for. Then I want to talk about the behavioral biases that we all tend to have and how we can overcome them, what it takes to have a balanced trading curriculum. You know, I see a lot of traders out there have what I call an unbalanced trading curriculum. They spend too much time learning one very important skill set and completely ignoring this other skill set that's incredibly important for successful trading. And that's what we want to help you understand is what does a balanced curriculum look like, and make sure you have access to that balanced curriculum. Then we'll talk about at the very end some of the ways to overcome these biases, and then we'll end this for Q&A here at the very end. Now, the primary thing that I want you to be able to walk away from today's session is a clear understanding as to how can I overcome the inability to consistently grow my account profitably. So many of you are logged in here today. Some of you have already chimed in into the chat window here. So for those of you that are brand new, please feel free to type in your name, where you're coming from. I see quite a few people joining from all over the world. I see South Africa, I see Germany, I see obviously plenty of people from North America. Please feel free to chime in and let us know where you're from. As you can see, there are many of you here in today's session. And I'd like to ask, a quick question here for a lot of folks. How many of you feel that you struggle with gaining consistency in your trading account? Please type yes into the chat window if you struggle with gaining consistency in your trading account. And I fully expect to see a lot of yeses. And that's the reality of trading. That's the reality of investing. Is that it's not easy to get to a point where you are consistently growing your account. That's the reality of it. And having spent nearly 18 years of my life as a market strategist, it's not surprising to me why so many investors struggle with gaining consistency with trading. And from my perspective, it comes down to the fact that as I look at the landscape of tools, education, services that are available to traders, whether it's from your brokerage firm, whether it's from third parties, whether it's, at the bookstore, the curriculum is heavily, heavily skewed towards things that are important, but things that aren't essential to profitability, or things that are not, the reason that give, or rather the critical elements for helping you achieve profitability. The amount of education, the amount of books, the amount of materials that are available on the subject on mindset and risk management and those types of things, it's very, very small. And I do believe that it's small because traders don't think that they need it. Most traders think that, oh, if I just learn more about technical analysis, if I just follow someone else who tells me what to do, if I just, learn option strategies, I'll be successful at trading. Or if I just get better at technical analysis, or if I buy the right indicator, or if I use the right indicator that someone else tells me, some secret indicator, that I'll be successful at trading. Yet, time and time again, and many of you here today, hundreds of you here today have spent hundreds, if not thousands of dollars throughout your trading career on education, on courses, on services for all of these things. And many of you might have been doing it for years, yet you are still in this position where you feel that you cannot consistently grow your account. The reason that you're still in this place is not because you haven't achieved enough education, or that you haven't found the right service, or you haven't found the right indicator. None of that is the reason. The reason is because you haven't focused on the right thing, which is mindset. And no one talks about mindset because no one cares to talk about mindset. When I do sessions on mindset, and I've done the money show, I've done mindset things, webinars, money shows, sessions, not a lot of people show up to it. And I think that's the reason why there aren't a lot of books on it. There aren't a lot of sessions on it, because people just don't pay for it. People don't buy it. People don't value it. People don't think that they need it. Yet it is the one thing that differentiates successful successful traders from everyone else. And that's the first thing that people need to realize. Before you even spend the time to educate yourself on this front, is that this is what separates professional traders and successful traders from everyone else. If you think it's technical analysis, if you think it's that, you just don't have the right indicator, then unfortunately you're barking up the wrong tree, and you're going to continue barking up the wrong tree, going after different indicators, going after different services, going after different courses, and still failing to reach this point where you're consistently growing your account. If any of you can relate to this, please type 1 into the chat window. If you feel that you have spent endless amounts of time, money, resources on, chasing after gurus or technical indicators, or, technical analysis, fundamental analysis, option strategies, yet you still find yourself in this position. And I see a lot of ones here. So many of you that are here today are in the same boat. And it's for a very specific reason. And hopefully during today's session, during this series, that you'll learn as to how you can break that cycle and how you can get to that next point of actually achieving profitability. Okay, now I know that was a very long intro, but I think that is very important to first set the tone as to why we are here, and commend yourself for being here, and hopefully you'll be able to stay here during the next 3 sessions. So a question that I get from a lot of traders is, are these sessions recorded? Can I have access to the slides? And there's yes. You can access all of them at optionsplay.com slash sign up. Sorry, the link on the screen that Philip just posted into the chat window is the correct one. That will give you access to the recording and the slides with the free 30-day trial to the OptionsPlay platform. I highly recommend that if you find yourself currently struggling with this, that you at the very least sign up for a free 30-day trial so that you can get access to the recording and the slides, because this is arguably the most important education that you need in order to get yourself to the point where you are profitably trading in the market. And we'll come back to this slide here at the very end, but you can either point your phone on the QR code on the screen or click on the link that Philip posted into the chat window. So let's start with stating some goals. My goal is to empower you to grow your trading account and become a profitable trader with this session. It's very straightforward, very simple, and very clear. Now, there's 2 ways as to how I think we have to do what we have to do to achieve this. First of all, we need to give you confidence. Understand how your emotions influence your behaviors that contribute to wins and losses. Specifically, what emotions that influence which behaviors that make your wins smaller than you anticipate them to be, and what contributes to your losses to be larger than you anticipate to be. That's number 1. Number 2 is consistency, building the ability to stick to your plan regardless of the current market conditions and your current open positions, because that is really the state at which your emotions will start influencing your behaviors that contribute to your wins being smaller than expected and your losses being greater than you expect. So many of you are probably that have answered yes to the first question are familiar with this, where you have a certain perhaps trading plan, but it always ends up where your winners are a little bit smaller than you think they're going to be, and then you end up with a few large losers that are far larger than you originally anticipated those to be. How many of you can relate to that? Please type 2 into the chat window if you can relate to that specific outcome. And almost every single one of you that have answered number 1 will have answered 2, because that is really what contributes to not being able to consistently grow your account in the long run. So I think we're all in agreement as to where we are, where we stand, and kind of let's start talking a little bit about kind of what's required. Now, before I was talking about the fact that when I look at the landscape of what's available to traders, you look at what's available to you at your brokerage firm, you look at what's available to you on Amazon from a resources perspective, you know, whether that's books or courses, or if you just look at the general services that are offered from everyone, you know, on the internet, they tend to skew, you know, what looks like a pretty wide variety of services. But from my perspective, this is actually a narrow tranche of what you actually need, and it's actually focusing you on the wrong things. So there's a lot of stuff out there on technical and fundamental analysis, courses, services, that signal, you know, indicator providers, people who have custom indicators, blah, 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 research companies that are all dedicated to technical and fundamental analysis. And there are hundreds, if not thousands of them. Many of them are fantastic services with people with a lot of knowledge and a lot of knowledge from successful traders that are operating these services, providing these education services. Yet, despite these thousands of providers, despite many of you spending thousands of dollars on it, why is it that you have not achieved that profitability? Is it just because you haven't learned enough about technical analysis? Is it because you haven't found the right indicator within technical analysis? And I tend to find that that can't possibly be the reason, because so many of you have spent so much of your time and efforts on it, yet you still find yourself in this specific position. Second thing, option strategies and concepts. There are lots and lots of courses telling you about all different types of option strategies, from basic to advanced, volatility, concepts, best practices. Yet, despite learning about all of these, applying many of these, you still find yourself in the same position. Is it because you haven't learned some new strategy and you just haven't learned the right parameters of that strategy? I find that hard to believe. And thirdly, signal services. This tends to be kind of the not the easy way out, but someone saying, hey, you don't need to learn technical analysis, or even if you just have a basic understanding of technical analysis, a basic understanding of option strategies, that's good enough because I will tell you what to do. I'm monitoring the market. I have some secret indicator that tells me when to buy. I know exactly what option strategies to buy on the back of it. If you just follow me, you'll be profitable. And many times that person may be profitable themselves. Yet, when you follow them, you lack the ability to get the same result as they do. Why is that the case? Is it because that you haven't followed them close enough? Is it because you don't know what you don't have enough knowledge of technical analysis and options trading? Yet you still find yourself in this position. I also don't believe that to be the case. But when I look at the landscape of what's available to traders, 95% of it is concentrated in one of these three categories with regards to education and resources. Yet, despite all of it, it's not enough. Why? Because it doesn't focus on the one thing that really matters, which is mindset. Meaning, when you have a trade on and you're making money or losing money on that trade, none of these things, technical analysis, option strategies, signal services, tackle what you're going to feel when you are in a winning trade and what you're going to feel when you're in a losing trade. Because how you feel or how you feel emotionally is what contributes to those wins being smaller than they should and those losses being larger than they should. And none of these resources and education processes tackle that. Even signal services. When someone else tells you, buy this, sell that, what they're not walking you through is, how do I feel when I'm buying this? How do I feel when I'm selling this? How am I feeling when I'm holding on to this and not doing anything with it? And because they're not walking you through it, and because you're not understanding what they're doing, you're not going to exactly follow what they're going to do. You're never going to follow exactly what you're going to do because you don't understand it. And that is what's missing from the picture of education for traders. And that's what we plan on tackling here today. Does that make sense, everyone? Please type 3 into the chat window if that makes sense to you. And that's the one thing as traders that we don't think our feelings have such a large impact on our P&L, but I would argue that your feelings and your emotions have much, much larger impact on your P&L than your ability to look at the markets from a charting perspective or your understanding of an option strategy. The biggest contribution to losses is actually how you feel and the behaviors that you have as a result of how you feel. And that's what we're going to tackle. When I look at successful traders, and I've been doing this for 18 years, I've worked with thousands of retail and institutional traders over these 18 years. When I look at successful traders, it is almost never, ever due to some secret strategy or indicator that they have that somehow you just haven't seen yet or that you don't have access to. What consistently I see with successful traders is their ability to follow a trading plan consistently, and more importantly, what that means in terms of to follow a trading plan consistently is to regulate their emotions, especially during a loss. That is what differentiates successful traders from everyone else. It has almost nothing to do with their indicators, what services they're subscribed to, what data platforms they have access to, how much knowledge they have options. I will admit, successful traders typically have been doing it for a long time, have amassed enough of a deep understanding of technical analysis of options trading, but that's not what causes them to be successful. It's their mindset and their ability to regulate their emotions through their trading that allows them to consistently follow a trading plan. That is what contributes to success. Now, it is easy to create a trading plan. to say like, here's my trading plan, this is what I'm going to follow consistently, that is arguably incredibly easy to do. What is damn hard to do is sticking to it, because we're human and we often make the most counterproductive decisions when we are placed under stress. What does stress mean? When we're opening a position and the P&L starts to tick. And I will admit, modern trading platforms that give us tick for tick P&L calculations probably doesn't help the stressful position that we're in, where we can see down to the very second, oh, I'm up $100 now. Oh, I'm down $100 2 minutes later. I'm up $300 5 minutes after that. That doesn't help the emotional stress that we're in and the decisions that we have to make as a result of that. So the tools that we have access to today many times is very counterproductive to being able to stick to a trading plan. But this is really what helps you understand what you should be focusing your attention on outside of technical analysis and fundamental analysis and options trading. That's really going to contribute to you being profitable, hopefully within 2024. Does that make sense, everyone? Please type 4 into the chat window if that makes sense to you. Perfect. So this is really where, in order to kind of understand how we get to that point, we need to introduce a concept called behavioral finance. Many of you may have heard the term, casually, but what does it actually mean? So when we look at behavioral finance, it's really the study of our behaviors that with regards to money matters. And what you typically find with behavioral finance is that we act in surprisingly unpredictable and irrational ways. And there are thousands of examples of this, but a good example is when we walk into a store and we see an item that's on sale. It's an item that we never thought about buying. It's an item that we didn't think that we needed, but we end up buying it because it seems like it's such a great deal, right? So now we end up spending money on something that we never intended on buying. When we walked in that store, we went in for some milk and we walked out with a set of skis because for some reason there was a set of skis that were 60% off, and we thought that was such a great deal. This is a good example of behavioral finance, of how we as human beings act in very irrational ways when it comes to our money and finances. Another good example of this, and probably more relevant to traders, is a stock that you purchased starts free falling. What do? We don't say, hey, the investment that I thought that was a good investment is turning out to be a bad investment. I should get out. We think, oh no, it's gone down. It must go back up. Let me hold on to it. So what you do is you basically end up not only losing money on the investment, you also tie up the cash that continues to be in this bad investment for something what could be a better investment. And that's part of what contributes to underperforming portfolios for equity traders, right? Is that when we buy a stock, we don't, what we do is we can hold on to losing trades for years, hoping for that stock to get back to break even, because we just don't want to take a loss, not taking into account the fact that not only are we losing money on the trade, but the cash that you have tied up in this thing could be better invested somewhere else that could help you outperform, yet you are taking a chunk of your portfolio and continuing having that chunk of portfolio underperform. And that's why in the long run, your overall portfolio tends to underperform the overall market. These are all, simple examples or basic examples of how behavioral finance kind of looks at what behaviors we have that contribute to us underperforming our stated goals with regards to money and finances, and tries to help you overcome it. So understanding your biases and influences and quirks, kind of how they influence your decisions, is number one. And in order to trade profitably, we must understand ourselves and our behaviors so that we have a chance of overcoming those behaviors. Does that make sense, everyone? Please type 5 if that makes sense. Perfect. So let's take a look at some of these trading behaviors that actually contribute to this. So, and this is just a small sample of the things that I have heard in my 18 years as a market strategist that clearly contribute to this how many of you have said that you currently are not consistently growing your portfolio? These are some of the things that I hear most common. Number one is the inability to take a loss and holding on to losing trades. This is by far the number one reason why most traders consistently cannot grow their account. We just as humans have a problem with taking on a loss, because taking on a loss means two things. It means that you are accepting the fact that an investment decision that you made or a trade that you made is wrong, right? So the views that you have in the market is wrong. And two, it solidifies the loss. It crystallizes the loss in your portfolio. Number two, taking profits early. This is something that another thing that a lot of traders will admit to. Hey, I got into a trade. I thought it was going to go to here, but as soon as it kind of moved in my favor, I took profits. I got scared. I thought it was going to perhaps reverse lower, so I figured I'm better off taking some profits, and I took it early. Next thing I know, the stock continued and reached my target eventually. But you know what? Guess what? At least I got some profits. I'm okay with that. Okay, makes sense. But what you have to understand is that what this does is it contributes to your wins being smaller than you think it should be, and then your losses being larger than they should be. And that is largely the two things that contribute to underperformance in the long run. Number three, taking partial profits. Okay, same thing as the one before, but instead of, I think the stock's going to go to here, but as soon as it moves here, I'm going to take some profits off the table. I'm still going to leave some left on the table, hopefully for it to move higher. But what you're doing is when the market is proving your views to be correct, you're doing the wrong thing. You're removing exposure. When in reality, you should be doing the other thing. When the market proves to be right, you should be adding exposure. When you have a losing position, instead of cutting that position, what do? You add to that position. The idea is that, okay, I made it for trade. I think something was going to go up, but instead it started going down. So only if I bought some more over here and then it reversed higher again, then I'll be able to make my money or get myself back to break even. But sometimes that doesn't happen and the stock continues to free fall, right? And now what you've done is you've bought some stock here, bought some stock here, and the stock continues to drop. Now, again, your losses get significantly larger than you originally expect. Now, like I said, this is a short list of the different behaviors that I have seen that contribute to wins being smaller than they should and losses being larger than they should. And this is by no means a exhaustive list, and this list goes on and on and on, and I'm sure many of you can relate to at least one, two, or perhaps all of the ones that are here on this list. But there's one thing that all of these behaviors have in common, and the good thing is that they have one thing that's in common, and because they have one thing in common, it's something that you can start learning and training on how to overcome. And the common thing across all of these behaviors is trying to avoid pain. Meaning, as human beings, you are avoiding pain when we see these types of behaviors in your trading account. Your inability to take a loss, that's just not wanting to accept the pain of a loss. You don't want to accept the fact that an investment decision that you had was wrong. You don't want to accept the fact that you're going to take a loss on that investment decision. So the inability to want to take on that pain, or rather the desire to push that pain out till tomorrow or the day after, is what contributes to our inability to take a loss. Taking profits early, how does that have to do with avoiding pain? Well, it's because when a trade goes in your favor, if it then reverses lower and goes against you, it's incredibly painful to admit that and to see that. So what do we rather do? We'd rather take a small gain to avoid the pain that small gain turns back into a loss. Taking partial profits is another variation of that. Adding to a losing position is another variation of not wanting to accept the loss and now actually actively doing something to try to avoid that. And this behavior, adding to a losing position, hoping that you're going to get yourself back to break even, while that is a very detrimental behavior for a lot of portfolios, and many of you that have ever blown up a portfolio, you likely have done it in this fashion where a trade goes in your favor. it didn't quite move in the direction you expected to, so you added some more, hoping that you'll get yourself back to position. This behavior actually comes from the rest of our lives, because in every other aspect of our lives, when something goes wrong, what do? We take action to try to fix it. Something goes wrong with your marriage, you try to take action to fix it. Something goes wrong with your children, you try to fix it. Something goes wrong at work, you get your colleagues together and you say, hey, something's wrong, let's go fix it. Well, in most other aspects of your life, you have the ability to take action to try to fix something that isn't going correctly. But in the markets, that's the one place that your actions don't matter. It doesn't matter what you think or what you want it to do or how you want to fix it. You don't have control over the markets. The only thing you have control over is what you have exposure to in the markets and how much exposure you have in the markets. So, this behavior that I see of adding to a position is actually arguably, people thinking that they're doing the right thing. They're taking action. They're not just avoiding pain. They're actually taking action, hoping to fix it. But by doing so, you actually do the wrong thing, or you actually can contribute to far worse outcomes than you can. And again, this comes from the fact that in every other aspect of your life, you can take action and try to fix something. But unfortunately, in trading, this is the one place where taking action sometimes actually can do the opposite intended effect. And there is some action that you can take, but that action is not adding to your position. So right intentions, wrong outcome. Does that make sense, everyone? Please type 6 into the chat window if that makes sense to you. But it all comes down to our desire as human beings to avoid pain. And that is the one common theme you're going to start to learn from a behavioral finance perspective, is that if you want to be successful in trading, you have to start accepting that taking on pain and accepting pain is going to be part of the process. And if you keep avoiding pain, you're going to keep committing the behaviors that contribute to your wins being smaller than they should and your losses being far larger than they should. Okay? So a balanced curriculum, in my opinion, requires three primary things. First and foremost, by understanding buy and sell signals, understanding how to interpret the market to generate entry and exit signals. This can be done through technical analysis. This can be through fundamental analysis. This can be done through a combination of technical and fundamental analysis. In my opinion, to get started, you just need to have a basic understanding of technical and fundamental analysis. You don't need to have some secret indicator. You don't need to have some fancy schmancy Bloomberg terminal. You just need to have a basic understanding of these concepts to get started. Because, like I said, the difference between a really great trader and a fairly good trader is not going to be, a huge difference with regards to their knowledge of technical analysis or fundamental analysis for that reason. Those things can help and kind of help you get to that, the best possible version of yourself as a trader, but they're not going to be the reason that you're successful. So start with the basic understanding. Good enough basic understanding is good enough to get started. The second thing is a trading strategy. Once you have a buy and sell signal, what trades are you going to place? Are you going to buy the stock? Are you going to buy a call option? Are you going to buy a call spread? Basically, understanding basics of options strategies. I think that if you just have a basic understanding of two-leg option strategies, that is more than enough to get started with regards to options trading. But the third part, this is the part that I see almost no average investor spending any material time on, which is the emotional intelligence side of things. Managing your behaviors as you experience gains and losses, as you feel pain in your portfolio. And guess what? You get pain on both sides. You feel pain on when you as you have a winning position in your portfolio, and you have pain as a losing position in your portfolio. That's the kind of the irony of this, right? It's not just you feel pain when you have a losing position, and there's only people that have losing positions that feel pain, but you actually feel pain, arguably more pain, when you have a winning position, because you don't want that winning position to turn back into a loser by holding on to it for too long, right? That hurts perhaps even more, where a trade that you think is going to go correctly, it does go correctly, maybe doesn't quite go as far as you think it's going to go, and you just hold on to it. Next thing you know, the stock drops, some news comes out, and you now have to take on a loss. That hurts even more. So a lot of times what we do is the trade goes in our favor. Before it reaches our target, we start scaling out, we start taking profits because we want to avoid pain. So it's important to understand you're experiencing pain on both sides of the equation, whether a trade is going in the direction you expect it to, or if it's not going in the direction you expect it to. And how do you deal with each one of those scenarios is what's going to dictate whether you are a successful trader or not. And many of you can probably look at kind of your education that you've had up until now. I'm going to bet 95% of it is focused on this stuff. You know, sometimes even 100% of it has been focused on technical analysis, fundamentals, and option strategies, and you've completely ignored, and you might not even have known about this area of trading and education that's required to help you become a successful trader. And this is really what I'm hoping in the session, is to really just illuminate how important this is, how important it is to have a balanced curriculum, and what you can do to start yourself onto the path of getting the right knowledge to put yourself onto the path of profitability. Now, how many of you, prior to this session, had no idea or had spent 0% of your time on this last element? Type yes into the chat window if you have spent zero amount of your education up until now on focus on kind of mindset, emotional intelligence, behavioral intelligence in your trading. And I'm guessing I'm gonna see a fair amount of yes answers here, saying that you haven't spent much time on this type of education. Okay, I see quite a few of you already chiming in and saying that is the case. And I think it's because this stuff is not sexy. This is the stuff that no one, arguably, this is the hardest part about trading. And a lot of people, they might kind of peek into it, think that, okay, I understand it. Okay, I understand I don't need more. But very few people actually take the time to actually dive into it, because it's the hard part. It requires you to dig deep. It requires you to think about what your behaviors are. And it's incredibly difficult for us as human beings to change our behaviors. But that is what it takes to become a successful trader. So some of the reasons that I see this type of education being overlooked by the vast majority of traders: number one, it's not, in my opinion, your fault. It's just limited education. And I think limited education comes down to the fact that successful traders are typically not focused on teaching. They're focused on trading. So they don't really have an incentive to teach necessarily. And I will say, when I have seen traders teach this particular topic, it's not well attended. Not a lot of people show up. Not a lot of people, think that they need this. A lot of people focus on the sexy stuff. People who say, hey, if you just follow my secret indicator, you'll win 90% of your trades. That's the stuff that sells. That's what people buy. When someone says you have to focus on your mindset, you got to focus on your behaviors, people don't pay for that. And that's why I think a lot of traders don't really focus on teaching this stuff, because not a lot of people think that they need it, not a lot of people pay for it, and kind of that is a self-fulfilling prophecy where there's not a lot of available education on it. So that's number one, why I think that there's not much education on it. Number two, it's easy to learn but incredibly difficult to internalize. So even for many of you that have followed me for the past few years, I spent many times teaching mindset, behavioral, risk management, things that are required for successful trading. But guess what? Those sessions are just not well attended. Not a lot of people show up. It's just, versus when I talk about technical analysis, when I talk about, specific option strategies, a lot more people show up for it. A lot of people are more interested in that stuff. And it's because the concepts are easy to understand, but they're incredibly difficult to implement. And a lot of people, will try it for a couple of days and just kind of go right back to their old behavior, because old behavior is easy to do. Changing your behaviors are incredibly, incredibly difficult to do, because it requires you to face the uncomfortable. It requires you to dig deep and say that I'm not doing the right thing, or my behaviors are contributing to it. I'm the reason for it. It's always easy to blame someone else. It's always easy to say, hey, I follow this other guy who's successful in trading, and if I just follow him, I'll be successful trading as well. So if I don't make money, I'm going to blame him. I'm going to say he sucks. His analysis sucks, or this service sucks, or this thing that I subscribe to, it's not working. It's always easier to blame the external thing rather than blaming yourself. And I can say 95% of traders that follow someone else's trading that aren't successful, it's not because that other person's not successful. It's because even though you're following someone else's trading signals, you still have to deal with these behaviors. You still have to deal with the pain of the open positions that you have in your own portfolio. And guess what? That person who's dealt with all of this and managed to overcome all of these things, guess what? They're not hand-holding you through this every single trade and saying, hey, this trade, it's up. I know it hurts to hold on to this trade, but you got to stick with it. You got to hold on to it, because our profit target is here. We're not there yet. Hold on to it. And vice versa. When a trade is going in the opposite direction you expect it to, hey, I know it hurts to cut losses here, but you got to do it. If you don't do it, you could potentially face larger losses. No one walks you through that. And that's why, even though you follow someone else who quote unquote is profitable in their trading, yet you're not profitable by following them, guess what? It's much easier to blame them and say their trading stocks or their signals suck. It's much harder to say, hey, I'm the problem. I need to fix what my behaviors are contributing to my losses, or I'm not taking the time to learn the stuff, and that's why I'm not successful. It's really hard to do that. And even though hundreds of you are here today, many of you will leave this today and not look back on this and continue your education on technical analysis and options trading and not focus enough of your attention on this. That's just the reality of it. I've been doing this for 18 years. I'm by no means, think that everyone that's going to leave this session is all of a sudden going to spend their time focusing on this stuff, because it's hard. And someone else said it, if it was easy, everyone would be doing it, right? But this is the hard stuff. This is the stuff that if you really spend the time learning, you have a real shot at being successful at trading. And if you don't, your chances of successful trading are very close to zero, because without it, your losses are always going to be larger than you think it's going to be, and your wins will always be smaller than they think they're going to be. And when your wins are smaller than they should and your losses are larger, you will always consistently underperform and be unprofitable in your trading. That's just unfortunately the reality of trading. So that is a good stopping point here for today. Like I said, this is something that we will be covering over the next few weeks as far as how to overcome this. We're going to talk about self-reflection, taking the time to regularly to evaluate your current past and trading decisions. There are many ways as to how you actually do this self-reflection. Some ways that some of you may have done. Some of you may, think that it's completely cuckoo to be doing journaling and meditation. But these are some of the things that have helped a lot of traders through the years to kind of take a step back and think about what behaviors have I contributed to that contribute to unsuccessful trading, and do I make decisions when a trade is going against me where I push off accepting pain to the next day and end up holding on to a loss larger than I should? When a trade goes in my favor, do I, through the act of hoping to avoid pain, take winning trades off the table too soon? You have to ask yourself those hard questions, and that requires you to kind of take a step back, think about trades that you've recently made, wins that you've made, losses that you've made, and sometimes writing it down and saying, did I follow the rules that I expected, that I set out for myself? And if I didn't follow those rules, why? What was I going through? What was I feeling? What was I thinking at the time? And then the practice of meditation is something that also I practice myself. Not everyone does. Some people do. But meditation helps me in real time understand that I'm feeling a certain way, and I can recognize that and help hopefully have a shot at changing that behavior. Now, that is really kind of slowing yourself down and kind of feeling your feelings so that when the next time you actually are feeling those feelings in real time, you have a shot at recognizing that and actually changing the behavior, because these behaviors that we have are hardwired in us. We don't think through it. It's subconscious at this point. We don't actually feel pain. It's subconscious of avoiding pain, and we just immediately go off and take profits too early and leave losses going for too long. That's subconscious already. So in order to change those behaviors, they have to become conscious feelings and conscious behaviors. And meditation is one of the tools, at least for me, to do that. You might find other tools that help you achieve that. But for me, in order to bring something that's subconscious back into the conscious, that's really kind of what meditation allows me to do. And the third thing we're going to cover is position sizing. Position sizing is one of the tools that helps you stick to your trading plan. Because if you don't have the correct position sizing techniques, you will always find yourself in a position where the pain is too much, and you will always revert back to these learned behaviors of pushing off pain too long and having your losers held on for too long and taking your winners off the table too quickly. And the only way that you have a shot at overcoming this is first having position sizing that fits your portfolio and allows you to accept that pain, because pain is acceptable, but only within a certain threshold. And we have to set that threshold correctly so that we can actually accept that pain. And that comes down to position sizing. So over the next 3 sessions, next week, we're going to take a break from this, right? This is a lot to cover. This is a lot to take in. But next week, because earnings season is kicking off already, we're going to look at early reports for earnings season, and we're going to kind of set up for the rest of the earnings season next week. And then we're going to come back. We're going to talk about risk management. We're going to talk about position sizing. We're going to talk about the foundations of profitable trading and how to understand position sizing, the impact on profitability, and then how can you put it all together into one congruent plan that you can have to help you put yourself onto the path of profitability. So I hope that this session is illuminating for those of you that have not learned about this stuff before. For those of you that have learned about this stuff, I hope that this continues your education on this front, because this is by no means something that you learn once and you're set and good to go. If you talk to successful traders and profitable traders, they'll tell you this is something they work on virtually every single day, if not every single week or every single month as they look back on their trading. Because it's easy to always revert back to your old behaviors. That's just kind of what's ingrained in us. That's what's kind of fundamentally hardwired in us. So if we don't actively work on it, we revert back to it. So for those of you that are, and for many of you that are even successful at trading, this is still incredibly important for you to learn and revisit from time to time, because this is kind of what keeps you on track of continuing and staying profitable in your trading. So I hope that this is helpful for those of you that are here today. I hope that you join me for the next few sessions and make sure that you are following through on this journey to help put you onto the right path for 2024 and your ability to be successful in trading. So I'll leave this with, if you want access to the recording and the slides, they are available. Philip will put a link onto the screen. For those of you that are members, you have access to the recording and slides. By tomorrow morning, we will send you everything so you can follow along. Like I said, this is an incredibly deep topic. It takes time to internalize. It takes time to understand, and then it takes far more time to internalize. And this is why having access to the recording and slides are good for you to review this and learn this at your own pace. So if you're already a member, or if you currently have a free trial, you will get access to it in an email to you tomorrow morning. If you are here for the first time, or you're just here learning about OptionsPlay for the first time, you can sign up for a free trial at optionsplay.com/signup, or point your phone to the QR code, and that will allow you to sign up for your free 30-day trial That'll give you access to OptionsPlay, give you access to all the resources that we have here to help you become a profitable trader, and access to the recording and slides in that email tomorrow morning to our members. So with that, what I'll do is I'll open this up for Q&A for about 10 minutes or so before I have to sign off. And please, if you have any questions, type your questions into the Q&A window. There's a chat window and a Q&A window at the bottom of your screen. Please bring up the Q&A window, and I will try to answer as many questions as possible out of that session. Thank you so much to everyone. Happy New Year to everyone. I am happy to be back. And yes, thank you so much for the wishes for the new baby. Thank you so much. David's asking a great question. He's asking about our daily plays, which is kind of the signal service that I'm referring to here before, right? And this is kind of one of our biggest problems with signal services, including our own, is that, these signal services that tell you kind of what to buy, what to sell, and kind of telling you kind of some of the things that we're trading, what it doesn't walk you through is this emotional element that I'm talking about. And a lot of traders will just follow it blindly and say, hey, you've had some losing trades. I've lost money. This service sucks. Every single signal service suffers through the same thing because we can't walk you through how we're feeling, even though we try to write about it to some degree as to, hey, this trade is going in our favor, and now it's time to add to the position. Now it's not time to lose position. People don't read the paragraphs of kind of how we're feeling and how we're, thinking about a specific thing. So, we end up getting a lot of complaints about our signals trading service. So we're in the process of rethinking how we can provide ideas to you, things that are valuable to you, yet aren't detrimental from that perspective, because someone coming in for the first time following it blindly isn't just going to say, hey, you've had a few losing trades, this server sucks, I'm going to cancel. So we're in the process of rethinking that. So this is something that we are currently actively working on. I'm taking an active role in that, and we'll hopefully have something back to you by early next week. Limiting losses, not running losses. Yes. So thought option losses are limited to premium. Yeah, it is, right? So just because your option losses are limited to premium in certain strategies, right? Whenever you're buying an option, your options losses are limited. That doesn't mean that you didn't trade too many contracts to begin with, right? So yes, you're limited to, let's say, $1,000 per contract, but if you trade 10 contracts, that's $10,000. Can your portfolio survive a $10,000 loss? It's not to say that it's limited. It's to say that you are losing more than you intended to, right? Maybe, for example, you have a $100,000 portfolio, and anything more than $2,000 worth of losses is going to contribute to underperformance of your portfolio. It's holding on to trade longer than you should, right? Just because you can lose $10,000 doesn't mean you should lose $10,000. Maybe by the time you've lost $3,000 on a trade that you could lose up to $10,000 on, you should be getting out of that trade. But what's preventing you from actually getting out of that trade? That's really some of the things that I think are worth looking at. I understand the emotional side and the rethinking. I just wanted to know I wasn't missing anything. I'm not sure what you mean by that, David. Like I said, what I find missing from a lot of investors is even this education on what how emotions affect your behaviors, specifically what specific behaviors and how to overcome those behaviors. That is not something that's, generally speaking, covered very well, in my opinion, for most traders and most trader education. Most trader education tell you about technical analysis, fundamental analysis, building a trading plan, stop losses, take profits. That's the stuff. The mechanics, and the mechanics are important, but it's not the essentials. Or rather the most critical infrastructure that's required to be a successful trader. But your losses before you start with options. Yes, and that's assuming that you are planning your losses accordingly. Most traders don't, right? Just because you know your losses doesn't mean that you should hold your trades until the full loss either, right? We almost never do. Just, you want to be able to manage your losses before they reach their max loss. Now, if you are sizing correctly and you are sizing it where the max loss of your trade is within 2% of your overall portfolio. So no matter what, even if the worst case scenario, you're only losing 2% of your trade, yes, you can hold on to your losses and never have to worry about managing losses. You're absolutely right. But I don't know of a single trader that does exactly that. No single trader, I think, does exactly that. Traders always tend to, as they get a little bit more confident, have some wins, start sizing up their trades because no one wants to trade one lots all the time and forever. People think that, hey, I've had 4 or 5 winning trades in a row. I'm really getting good at this. Let me start sizing up. Next thing you know, sizing up contributes to much larger losses in your portfolio. That is the behavior that I see over and over again. And unfortunately, for people who think that this is not important or this is not something that they need in their portfolios because, options already limit my losses. Unfortunately, those are the traders that in the long run tend to underperform in their portfolios and say that I cannot consistently grow my portfolio because they just don't spend enough time understanding this and overcoming these behaviors. It's not just one. It's a whole slew of behaviors that contribute in conjunction with each other to underperformance. Have you done or will you present content on how to create and execute a trading plan? Anthony, I've done quite a bit of this stuff, and we've actually written blog posts on our platform specifically on it. So we will um, I will be writing more of this content here in the next few coming weeks specifically on this. So yes, I will be putting more of that stuff. And so this is some of the stuff that we will be covering in the last session during this trading summit. Trading involves your decisions. You go in and out. Even when you make little, you get out and you leave money on the table. That is very challenging. There's no doubts about this, that this is arguably one of the most challenging things that you will deal with, you will have to learn in your life. It's not easy. There's no part of this that's easy. But the thing is that most traders are going into this not even having this education. It's not easy when you have this education. Imagine trying to do it without even knowing about this stuff. That's kind of what I think is shocking. And that's what scares me about it, the thousands and thousands of traders that start every single day, not even knowing that this type of uh, education exists, that this type of stuff is necessary for trading. Let alone the people who know it and kind of are struggling with it. At least now you have some understanding and you have the ability to follow up with this and try to overcome this stuff. When you have that knowledge, it's hard. But imagine going into it not even knowing this knowledge. So hopefully that's kind of what I'm trying to do, is to at least illuminate that this is an area of trading that I see most traders lack and that you need to start adding to your education. If I want to follow the strategy of 45 days and take 50% profit and it goes too fast to target price and it's at 34% profit, should I wait to take 50% profit? So one, this is a very specific question with a very specific scenario. It's hard to answer that definitively without looking at the type of trade that you're making. I'm presuming you're talking about, selling an option strategy in this particular case. But the short answer to your question is yes. When you But I will say that, when trades go in your favor, you have a little bit more flexibility than when trades go against you. When trades go against you, there's no flexibility in the rules. If you don't follow the rules, you will underperform. There's no doubts about that. When trades are going in your favor, you have a little bit more flexibility. You have a few more optionality. Do you want to take profits at 34%? Yes, maybe you do want to take profits, but you want to perhaps roll, if it reaches your profit target too early or too fast, then you might want to take profits on the current position, but establish a new position, right? So it's not as black and white versus when the trade goes in the direction that in the opposite direction, it's very black and white. Cut losses, move on. When rules are clear, it's not as hard to block out emotions, but emotions especially come into play when the decision of what to do depends is ambiguous and may vary depending on the situation. Any advice around that? Yes. So like I said, the rules for on a loss is very clear cut and black and white. There should not be any emotions, even though there are emotions involved in it. When a trade goes in your favor, there are a lot more options, but they're not really ambiguous. There are just multiple options that you can take. And it depends on kind of how far you think the stock can continue to go in the direction that you expect it to. So that just comes with experience. And unfortunately, you're not going to build that experience if you don't first follow some of these basic rules. So start with the basic rules, follow them, and as you follow them, you'll find yourself getting to the point of breaking even. And if you break even, you'll have that time and experience to kind of start working on these variations when the trade does go in your favor. And those are some of the things we're going to cover in weeks 2 and 3. With that covers what I have time to share with you here today. I hope that you find this stuff illuminating. I hope that you find this stuff useful in your trading. And I hope that many of you will embark on this in your journey on 2024 with us here at OptionsPlay. Thank you so much. And I hope you guys have a great trading day.